Hey everyone, welcome to episode 2 of Building a Financial Fortress, my new podcast. Um, as I mentioned in my first episode, this episode is going to be all about Bitcoin. Before I get into it, I want to make sure that you know to do your own homework and do your own research. This is not investing advice. Um, I have made plenty of investing mistakes in my career, and I'm just here to share my knowledge and hopefully help you improve your financial IQ in the process. So let's get right into it. Bitcoin. I've written quite a bit about it in my blog in the past. I've talked about Bitcoin as how it fits into an overall asset allocation strategy. I've also talked about different ways of getting exposure to Bitcoin, different ways of investing in it. And I've also had been, putting in some recommended weightings in some of my monthly portfolio updates. Uh, for this discussion, I think I just want to kind of go back to the basics and focus on Bitcoin itself and why it's something that I think everyone should have a non-zero allocation to. So first of all, what is Bitcoin? Bitcoin is really the first peer-to-peer digital payment system ever created. It's entirely decentralized. There are thousands of exact copies of the Bitcoin ledger stored on computers all over the world. These are called nodes and are used to validate authenticity of the Bitcoin transactions. If any node were to go down, there are many, many more that have the same information, thereby making the blockchain extremely resilient. In fact, I actually run a node myself. It's very easy to do. It took a long time to download, but once it was up and running, it just keeps running. Transactions, on the other hand, are validated by miners, and they use high-powered processors to compete to solve complex math equations. If a miner is successful, they will write the next block of the Bitcoin ledger, again a copy to be retained on all nodes for future reference, and they earn a block reward, which is newly issued Bitcoins. Once written, the block is immutable and unchangeable. And so are all the blocks that were written previously. Anyone can see this since the blockchain is public. So while the identity of the parties to the Bitcoin transaction are not visible, the address of their wallets is, and other aspects of the transaction, such as the amount of Bitcoin being transferred, are public. Perhaps one of the most notable aspects of Bitcoin is the ability to balance privacy and transparency in this way, which is quite unique. The amount of Bitcoin processing power is called hash rate. The higher the hash rate, the more difficult it is to attack the system in order to compromise the ledger and create fake transactions. This is what they call the 50% attack. This was recently done with a smaller coin, Bitcoin SV. At current hash rate levels, which have been growing on an annual basis roughly in line with the price of Bitcoin, roughly 200%, it would be virtually impossible to harness the computing power necessary to overwhelm the network. As the network grows, so does the hash rate. Hash rate did dip when China shut down all the mining operations in their country, but it's recovered since then to a new all-time high, actually, recently, as the miners relocated to more Bitcoin-friendly countries, including the US. Helping this along, and really part of the game theory embedded in the Bitcoin code, when the hash rate drops, the difficulty of mining new blocks also drops, making it more lucrative for existing miners to solve the equations faster and thereby earning more Bitcoin. So when hash rate recovers, the difficulty increases, and therefore uh, the miners don't make as much, which again balances out the system. Because of Bitcoin's decentralization, it's trustless. It doesn't require an intermediary such as a bank or other entity to complete a transaction. So similar to physical gold and silver, it can be self-custodied by holding the coins in a hardware wallet, basically a USB flash drive, as opposed to on an exchange like Coinbase. Storing Bitcoin on a hardware wallet does require you to know the keys or a series of random words that will allow you to recover your account. If those keys are lost, then your Bitcoin is lost forever. So it's important to save them in a safe place. Bitcoin is a scarce digital asset. There will only ever be 21 million Bitcoins in existence. Currently, there are about 19 million Bitcoins in existence, and the remaining 2 million will be mined over the next 30 years or so until all the coins have been issued. Every 4 years, there's what is known as a halving event, which reduces the miner's reward by half. So it's currently 6.25 coins per block. So at today's price, I guess 30,000, 35,000, 40,000 a coin, let's say, that means a miner can make about $240,000 each time they successfully write a block. So Bitcoin mining, while extremely difficult and capital intensive, since it requires hundreds, if not thousands of processors in most large operations and lots of cheap electricity, can be lucrative. Indeed, investing in Bitcoin miners and related companies has become quite popular. Bitcoin is and has been for some time the largest cryptocurrency by market capitalization. Ethereum is currently number 2. Because of Ethereum's popularity in the decentralized finance and non-fungible token or NFT worlds, it has seen strong demand, even though the protocol is very different from Bitcoin. For example, it is more centralized. A core group of developers can make changes to the protocol. It has no max supply, and it is moving to a less rigorous but less energy-intensive method of validating transactions called proof of stake versus the proof of work method that Bitcoin uses. And although currently it looks like it's actually going to be a deflationary protocol because the fees that are generated on the network, a portion of those are being used to um, basically retire or burn tokens. So it's actually reducing the amount of supply, which is deflationary technically. Um, but it's generally believed by the Bitcoin community that proof of work is superior to proof of stake as a security method, just because it's so difficult to overwhelm. So the investment thesis for Bitcoin is fairly straightforward. As a scarce digital asset, it is similar in many ways to gold or silver. Unlike gold, it is compact, and a significant amount of value can be stored in a very small space on a hardware wallet the size, again, of a USB flash drive. Also, unlike gold, it can be transferred easily to whoever you want without the need of a third-party intermediary. To me, my opinion, these are significant improvements over gold. But as a digital asset, there's more that Bitcoin can do. Bitcoin also has the capability to be a base layer of a new monetary system with second and third layers built on top of it that can handle transactions and faster processing speeds at a fraction of the cost, perhaps someday even rivaling Visa or MasterCard payment networks. One of the complaints with the Bitcoin base layer currently is it takes 10 minutes to write a new block, and each block is limited to 1 MB of data. These limitations are eliminated with second layer protocols such as the Lightning Network, which sets out to do much of what Ethereum has sought to do. Ethereum sought out to solve these speed and volume issues on the base layer, but as time has gone on, it's clear that this is very difficult to do without sacrificing security, which is the main reason why Bitcoin was architected the way it was. I think Ethereum and the 10,000 or so other altcoins have their function in place. Many will not survive the shakeout, but they're very different from Bitcoin. So this is kind of really my high-level overview of, of Bitcoin. There are many good resources to learn more about Bitcoin. I think probably one of the best books I read is The Bitcoin Standard. I highly recommend that book. Also, there's just a lot of great free information on YouTube. Um, Also, Michael Saylor, who's the CEO of MicroStrategy, who's also a big Bitcoin proponent, has started a website called hope.com that has a lot of free uh, materials on it for learning more about Bitcoin. Um, One of the things I've found with Bitcoin is the more you study it, the more you realize you don't understand it. And at the same time, I think you also realize how revolutionary it truly is in terms of how Bitcoin operates. And probably the thing that sticks out in my mind the most is just the scarcity. There really is no other asset in the world that has a absolutely fixed supply. If you think about gold or silver, if the price goes up enough, people will mine more and create more supply. Similarly with real estate, if home prices go up in a particular area a lot, there'll be a lot of demand for land and to build new homes, which thereby increases the supply. So even stocks, if a company's stock goes up a lot, they may have an incentive to sell more shares to raise capital, which then creates more inventory, essentially, of shares of stock. So perhaps the only asset I could think of that's not like that would be a unique painting or something like that, where it's just a one of a kind, like the Mona Lisa, where it's a one of a kind asset. There's only one in the world, but really nobody can have it because it's in a museum. So, but most assets tend to, the supply tends to increase when the price goes up, um, uh, to one degree or another. And Bitcoin just doesn't do that. So that is really, a big reason why, I feel like Bitcoin's an important part of an investment portfolio. I think of it the same way I think of gold or silver. It's a hard asset, perhaps the hardest that we've ever seen that's ever been invented. Um, some people worry about regulation. Um, I think from what I've read and learned, a lot of that uncertainty it really exists with the other cryptocurrencies, not so much with Bitcoin, only because Bitcoin has already been deemed a commodity or property, and the tax accounting rules are pretty straightforward around it. If you buy it and then later sell it at a higher price, you pay tax on that. Interestingly, you can um, there's no wash sale rules like there are for stocks with Bitcoin, at least not currently. So if you're in a loss position, you can sell it, take the loss, and then the next day buy it back. Um, that's probably going to change, in my opinion, and that's probably a good thing because I think that's something that probably adds a lot of the to the volatility of the Bitcoin price. But basically, um, Bitcoin scarcity, its portability, its ease of use. There's just many positive qualities that give it, really superior qualities in many ways to gold. Um, Now, I started out recommending, 1 to 2% of your portfolio. Then I kind of bumped it up to 5, and then it's honestly whatever you feel comfortable with. I mean, there's some big investors that have half their portfolio in Bitcoin and the other half in some other stock or something like that. Um, it's all over the place. I think I still believe in diversification. I wouldn't want to put all my eggs in one basket. You never know. There's always uncertainties. But I think definitely more than zero is a good number for owning Bitcoin as part of your investment portfolio. And a lot of people like to speculate, and they enter into these options contracts where they're shorting or or trying to leverage long on Bitcoin, and um, the it's so volatile that these folks just get wiped out like regularly on both sides of the trade, whether they're short or long, and they end up losing their coins. So um, I would stay away from all that. As tempting as it is to trade and to try to buy low and sell high, it's just silly when you have an asset like this that's going to, continue to appreciate, I believe, in the long run as it finds its market. Um, doesn't take a lot of institutional investor interest to drive the price up significantly. We all know the supply is capped, so the supply isn't really the issue, it's just demand. And what's going to drive demand? Well, it's going to be portfolio diversification from institutions, but they're not going to move into the space until there's more regulatory certainty. But when they do, the price is going to move very, very fast because, again, the supply is constrained, and if there's a lot of demand, and it's not because Bitcoin is global, the demand is global. So it's not just a US thing or a Canada thing or a Europe thing. It's truly a global asset. So, I mean, because there's for example, there's stocks that you can buy on the Canadian Stock Exchange, but you can't buy them in the U.S. Or there's stocks that are listed in China that you can't buy in the U.S. unless they have a U.S. listing or an ADR or something like that. So you don't really have those limitations when you have a global asset like Bitcoin. Um, uh, so the theory goes is the demand increases, and the demand can increase for any number of reasons. You know, investment diversification in portfolios, um, you know, uh, corporate balance sheet, treasury function, versus cash, which is what MicroStrategy did in a big way. Um, and uh, Also, again, as a base layer. So if the Lightning Network, which, admittedly is a bit behind the development of Ethereum and some of the other protocols in terms of providing, transaction network services, but it's here, it's working. There are several products that are built on this, including Strike and um, Stacks, and there's several others. And as these gain momentum, it just creates another use case for Bitcoin because Bitcoin becomes the final settlement layer, and then the transaction layer can handle the movement of money around around the world for very low cost. So, I see this as being tremendously disruptive to payment providers. Um, we'll see what happens with banks. There's a good chance, I was just reading this week, that the stablecoin industry may just get handed to the banks, and be subject to their regulatory framework, um, which will probably go a long way towards advancing the government's concerns about um, the impact of cryptocurrency and on the financial services industry, and you know um, potentially causing a financial crisis or whatever. Um, that's probably step one. Step two is probably going through all the coins and figuring out which ones are commodities, which would probably be Bitcoin for sure, and some of the other ones perhaps, and which ones are securities, meaning that they were, essentially issued for profit, and there's a core group of people that holds the original shares or the original coins, and that they were sold to individuals initially with the hope of making a profit. Those are securities, and those fall under, in the United States, under the securities laws. So um, that could wipe out a lot of the altcoins potentially, if they don't get registered. That could also wipe out a lot of the exchanges doing business in the United States if they're not registered. Um, so, so the whole regulatory space is very much up in the air. A lot of uncertainty, but it doesn't seem to be as much uncertainty with respect to Bitcoin. In fact, there doesn't really seem to be any relative to the other ones, which I think is comforting. Although there's still, there's still people that are worried, and so that sentiment does get reflected in the price. Um, so that's kind of the latest thoughts that I have on Bitcoin. I think it's really important to educate yourself. The more you study it, the more you realize you don't understand it. Um, but having looked at how our monetary system operates with the Federal Reserve and the banks, and how the money flows around in that system, and repos and reverse repos, and the treasury market, and bank reserves, and all that. Um, Bitcoin's way less complicated than that. In fact, it even looks simple. Um, but again, you have to study it. You have to really spend the time. But once you figure it out, um, it all kind of begins to make sense that, hey, this is um, some place where you can store your hard-earned money, and that over a long period of time, it's going to retain its purchasing power, and it's probably going to appreciate at a faster rate than a lot of other assets would, um, because of the aspect of Bitcoin, that it's a technology, and technologies have adoption curves, they have S curves, and and so that adoption curve will drive price over the long haul and volatility. And so, but if you have a long enough time horizon, and again, we're talking 5 years, 10 years, 15 years, 20 years, and you hold that asset in your portfolio, don't sell it, don't trade it. In the long run, you're going to be happy. And when you do need to monetize it at some point down the road, if you shouldn't need to sell it. You should be able to borrow against it like other property, like real estate or anything else. And if you have a sufficient amount of Bitcoin, um, a small loan would not be a big deal. In fact, that's actually how life insurance works, is a retirement tool. You take out a policy. That policy has a cash surrender value that grows over time. And then when you retire, you basically borrow against that cash surrender policy, cash surrender value, and you live off of the life insurance loan proceeds, and you don't pay any tax because it's a loan; it's not taxable. And then when you pass away, the life insurance contract pays out, pays off the loan, and then the rest of the money goes to your next of kin or whoever the beneficiaries are of the policy. So, and this is something I've written about also in my blog in the past. So Bitcoin can be really used the same way as a retirement tool. Um, and I'm sure in 5 or 10 years, there's going to be all kinds of lenders more than willing to lend on Bitcoin as long as you keep your leverage relative very low so that you don't get wiped out. Because the same thing could happen. Bitcoin's price could plummet and you could get wiped out. So you want to make sure that you don't, have too much borrowing against your Bitcoin. But that's a brilliant way to get money and that you can live on, and it's not taxable. So uh, I'm very favorable, towards Bitcoin. I think, like I said, a non-zero allocation's very important for most people, and I could be wrong, but it certainly seems like it's we're heading in the right direction in terms of the adoption and the game theory. A lot of people talk about this concept that the Bitcoin game theory, which is the early adopters are going to have an advantage versus the later adopters. And as that advantage begins to show itself, other people are going to have to enter in. And eventually, everybody's going to have to be in it, or they're going to miss out. And so, one example of that might be El Salvador. They made it Bitcoin legal tender, first country in the world to do that. Now they're looking to uh, basically sell bonds that are backed by Bitcoin and will be used for, to develop a new city. And part of the bond proceeds will be set aside in Bitcoin as a security. And then if the Bitcoin appreciates in value, then the bondholders, get some of that upside appreciation. But it's really a revolutionary financing concept, and they could, if they were successful in selling these bonds, they could use that money to pay off dollar-denominated bonds that they have with the International Monetary Fund. And if they were able to continue to issue those types of bonds, they wouldn't need any money from the International Monetary Fund, which would be shocking, um, revolutionary in many ways. So it's, an experiment. If it fails, then oh well. But if it's successful, many other countries are going to look at that model and want to replicate it because there are a lot less strings attached to a Bitcoin bond than there are with some of these other types of financings that have happened historically. The other unfortunate thing is that when the dollar strengthens, it becomes much harder to pay those back, especially if your local currency is weak. Um, and unless you happen to have adopted the dollar for your local currency, which is the case with El Salvador. But anyway, there's a lot going on in the space, a lot to keep abreast of. It feels to me like things are moving faster, things are changing, market cycles are accelerating, and Bitcoin is just one of many innovations that have appeared that are going to continue to push things forward. So hopefully you find this helpful. Thank you for listening. Please leave a comment. Let me know what you think. If there's anything else that you'd like to hear about, I'm not sure what the next episode will be on, but I will figure it out between now and then. And have a great week. Thanks.